Now we're going to go over the two different methods to calculate cash flows. And I have this handout in Blackboard for you. The first method is the direct method. With the direct method, we're going to calculate these items over here on the right of our chart. So let's start with cash collected from customers. So to calculate this, you'll have to find sales on the income statement, and from that number you'll then look to the balance sheet and look up your beginning and ending balances for accounts receivable. The beginning balance as of January 1st and the ending balance as of December 31st. If the change in the accounts receivable balance has increased for the year, we will take sales and we will subtract the amount of that increase. If it has decreased, we will take sales and we will add that decrease. Whatever that total comes out to will be the amount of cash collected from customers. The reason for this is accounts receivable is accounted for in our sales. However, accounts receivable is not a cash inflow. So if accounts receivable is going up, sales are also going up, but that doesn't mean that cash is going up. If accounts receivable are going down, that's not from a sale. When accounts receivable goes down, that means we're collecting cash. So that's the rationale behind this. What you have to know how to do is how to calculate this. Now, the next item is cash paid for inventory. To calculate this, we take the cost of goods sold off of our income statement and we look at the change in inventory from our balance sheet. If it increased during the year, we will add that. If it decreased, we will subtract that. We also then have to look at accounts payable on our balance sheet. And if that has decreased, we will add that decrease. If it has increased, we will subtract it. So when we factor in all three of these items together, your total will be the amount of cash paid for inventory. Wage expense from the income statement, you will adjust that for accrued wages payable with the decrease or increase as shown on the chart here to figure out the cash paid for wages. And any other accounts, we will take, for example, other operating expenses. If we have a related accrued liabilities, let's say interest expense, something like that, we would adjust it for the interest payable account. So if there's a payable, we add the decrease or subtract the increase. If this is insurance expense and we have a prepaid insurance account, we would adjust it by using this format down below. So we can have a number of different accounts that kind of fall under these categories. If it's a accrued liability like interest, we would use this. If it's prepaid rent or prepaid insurance, we would use this below. Any non-cash items we will have to eliminate. Those items are depreciation and amortization expense. We will simply not report those because those are not cash items. The indirect method we covered in an earlier course in Accounting 3. I will just put this chart up here for you to review. We generally start with our net income, add depreciation back to net income because it's a non-cash issue, add amortization, we'll subtract off any gains from our income statement, add any losses from the income statement because those are non-cash events, a gain or a loss, and then finally we'll make these adjustments. For example, if we have current non-cash current assets, things like accounts receivable, inventory, if those accounts have increased, we will subtract that increase. If those assets have decreased, we will add those decreases. So if inventory has gone down, we will add the inventory decrease to the amount of net income. Liabilities are the exact opposite. If a current liability has increased, we will add that increase. For example, wages payable, and then the opposite, if wages payable has decreased during the year, we will subtract that decrease. Both the direct and indirect methods will result in exactly the same cash flow from operating activities. The investing and financing sections will be done independent of this. These sections just show us what do we do or how do we report the operating section.